Exchange-traded funds, ETFs, and index funds are both investment vehicles designed to provide investors with exposure to a diversified portfolio of assets. This includes such as stocks or bonds, while minimizing costs and tracking a specific market index. However, there are some differences between the two. Exchange-traded funds, ETFs. Structure. ETFs are traded on stock exchanges, just like individual stocks. They are bought and sold throughout the trading day at market prices. Intraday trading. ETFs offer intraday trading flexibility, allowing investors to buy and sell shares throughout the trading session at prevailing market prices. Pricing. The price of an ETF fluctuates during the trading day based on supply and demand. It might trade at a premium or discount to its net asset value, NAV. Investment types. ETFs can track a wide range of indexes, including stock indexes, bond indexes, commodities, and more. Transparency. ETF holdings are disclosed daily, offering transparency into the assets the fund holds. Tax efficiency. ETFs are generally tax efficient due to their structure. They may have lower capital gains distributions compared to traditional mutual funds. Liquidity. ETFs are usually highly liquid due to their listing on stock exchanges. Index funds. Structure. Index funds are mutual funds that aim to replicate the performance of a specific market index. They are bought and sold at the end of day net asset value, NAV. Trading. Index funds are priced at the NAV calculated at the end of the trading day. Orders placed during the day are executed at the NAV calculated after the market closes. Investment types. Index funds are designed to track specific indexes, similar to ETFs. Transparency. Like ETFs, index funds disclose their holdings regularly, typically on a monthly basis. Tax efficiency. Index funds can also be tax efficient, but they might have slightly different tax implications compared to ETFs due to their structure. Liquidity. Index funds are generally liquid, but they do not offer the same level of intraday trading flexibility as ETFs. In summary, both ETFs and index funds offer investors a way to passively invest in a diversified portfolio that mirrors a market index. The choice between the two often depends on an investor's preference for trading flexibility, pricing, and investment structure. ETFs are popular for those who value intraday trading and pricing flexibility, while index funds may be favored by those comfortable with end-of-day pricing and the traditional mutual fund structure. FAQ section. How are ETFs and index funds similar? Both ETFs and index funds track market indexes, aiming to replicate their performance while offering diversification. They both have low expense ratios compared to actively managed funds. How do ETFs and index funds differ in trading? ETFs trade throughout the trading day at market prices, similar to individual stocks. Index funds are priced at the end of day net asset value, NAV, and can only be bought or sold after the market closes. Which one offers intraday trading flexibility? ETFs provide intraday trading flexibility, allowing investors to buy and sell shares at any point during the trading day. What about pricing and trading timing? ETFs prices fluctuate throughout the trading day based on supply and demand. Index funds prices are determined at the end of the day based on the NAV. Which one is more tax efficient? Both ETFs and index funds can be tax efficient due to their passive nature. ETFs might have a slight edge due to their in-kind creation and redemption process. Are they transparent about holdings? Yes, both ETFs and index funds disclose their holdings regularly, providing transparency into the assets they hold. Are there differences in liquidity? ETFs are usually highly liquid due to their listing on stock exchanges. Index funds are generally liquid but do not offer intraday trading like ETFs. Which one is better for me? It depends on your preferences and investment goals. If you value intraday trading and flexibility, ETFs might be preferable. If you're comfortable with end-of-day trading and NAV pricing, index funds could suit you. Can I invest in both ETFs and index funds? Absolutely, you can invest in both types. It's essential to consider your investment strategy, risk tolerance, and preferences when making choices. What's the takeaway from this comparison? Both ETFs and index funds offer passive investment options with similar objectives. The decision between the two often comes down to trading flexibility, pricing preferences, and your investment strategy. Thanks for watching.